Artificial intelligence is now a multi-trillion-dollar force transforming every corner of our world. From diagnosing diseases in minutes to driving Wall Street's trading algorithms, AI is rewriting the rules of the economy. But is the gold rush for AI startups just all hype or something real? In this video, we'll uncover where AI is truly making money, where the bubbles might burst, and what the AI investors should watch. Hop on the ride to discover AI in this economy. In this video, we also have something exciting for our subscribers as well, so subscribe and always be ahead of others. Let's start with the big picture. The World Economic Forum estimates that generative AI alone could add $4.4 trillion per year to the global economy, while IMF sees AI boosting global GDP by roughly 0.5% annually from 2025 to 2030. But how? The answer is simple: by supercharging productivity across industries. So, which industries are AI transforming fastest? Well, it will not be a lie if I say all of them, but let's just look at some major ones. Healthcare. AI has taken the healthcare industry by storm. AstraZeneca's AI can predict 1,000 plus diseases years early. On the other hand, a UK and AI-assisted digital platform, Huma, cut hospital readmissions by 30% and clinicians' review time by 40%. And AI is now spotting cancers and brain lesions faster than doctors. The next sector is finance. 70% of banks already use AI for fraud and risk. And when it comes to generative AI, powering robo-advisors and chatbots, AI is killing the game. Logistics and manufacturing. In logistics and manufacturing, Amazon's AI cut delivery times, optimized stock, and boosted speed. A lot of factories now run with AI-guided robots and digital twins of supply chains. One analysis projects the AI manufacturing market will grow from $6 billion in 2024 to $68 billion by 2032. Agriculture. Agriculture is being transformed as well. In Kenya, the ISDA-developed virtual agronomist chatbot advises on fertilization, whereas AI drones scan fields, diagnose diseases, and guide precision planting, just like an agricultural Superman protecting the farm. Education and media. With AI, tutors are now personalizing learning. A WEF report notes that AI-based digital classrooms can reduce assessment time and improve retention. Big media studios are cautious to approach it, less than 3% of 2025 budgets for Gen AI, but it has proven to be a holy grail for indie creators. They are already using AI to script, edit, and dub. That was the impact. Investment trends and deal highlights. Now let's talk money. 2024 saw an explosion in AI funding. Global VC investment in AI startups hit about $131.5 billion, which is 52% year over year. Half of all venture funding in late 2024 went to AI companies. You might be wondering what's causing this. The simple answer is investor FOMO. High-profile rounds feed the excitement. For instance, just look at generative AI. OpenAI closed a $40 billion round at a $300 billion valuation. Elon Musk's xAI raised $4.3 billion for its LLMs. That numbers give me a FOMO, man, although I am a brave person. The graphic here shows some eye-popping recent deals. These rounds were led by top-tier investors. Silicon Valley giants plus corporate VCs dominated the cap tables. Major 2025 AI funding rounds. OpenAI, $40 billion, early 2025. xAI, $4.3 billion, June 2024. Anysphere, Cursor, $900 million Series C, June 2025. Sandbox AQ, $450 million Series E, April 2025. Sandbox AQ, $450 million Series E, April 2025. Global Venturing Report confirms Alphabet's many venture funds, as well as Microsoft and Nvidia, were the most prolific backers of startups in 2024. Even sovereign wealth funds got in on it. Abu Dhabi's Mubadala co-invested in an AI fund with Microsoft, and Saudi PIF announced a $100 billion AI initiative. These are the clear indicators that money is pouring into every layer of the AI stack. Databricks raised a jaw-dropping $10 billion in 2024. Expensive? Yes. But with $1.3 billion in annual revenue and thousands of paying customers, there's a solid engine under the hood. Now compare that to Cursor, a code generation AI startup that pulled in $900 million at a $10 billion valuation in 2025, that too with just $100 million in revenue and deep losses. Critics say these AI coders are still losing money per line of code generated. We're seeing two AI worlds, one with real traction and real customers, the other with flashy demos, no profits, and massive burn, which makes you think that you need a good graphic designer. The most important thing for you is to have right information, skill, and tools, and we are offering you tools and tricks to educate and train you about AI and its future. So, you are never behind. Drop your email using the form at the top of the description to get our free Prompt Like a Pro ebook and future bonuses, because AI is here to stay. So what's fueling the hype? Thanks to viral tools like ChatGPT, expectations are through the roof. Headlines promise trillions, but the truth is that AI value takes time. Enterprises move slowly. Integration is hard, and overhyping now could mean disappointment later. Some experts even see déjà vu. Remember the AR/VR boom? Tons of funding, barely any returns. AI could be next if startups can't turn hype into paying customers. But don't get it twisted. This does not mean AI is overhyped across the board. If a company helps real people save time or money, and if it owns a valuable data set or has tech others can't copy, it can be massively valuable. But if all it has is a cool demo and no clear path to revenue, you better watch out. But despite all the risks, investors aren't backing away from AI. Let's see why AI is the investor dream. Because apparently AI businesses scale fast. Once a model is trained, it can serve thousands or millions of users with little added cost. Margins are up to 80%. That's SaaS level profitability, but turbocharged with automation. And there's the moat called data. The more data an AI has, the smarter it gets. For example, when a cybersecurity AI trained on millions of attacks, it learns faster, defends better. That feedback loop creates a defensible edge, a loop that new players just can't replicate. That is why enterprises are going all in. In 2024 alone, spending on generative AI jumped to $13.8 billion, 6 times more than the year before. And once you get the taste of it, there is no going back. Once a company adopts one tool, it usually adds more. That's high retention, cross-sell heaven. So, as an investors, what to watch in 2025? Know that not all startups are worth the hype. In 2025, smart investors should look for more than buzzwords. Find out if the products solve a real problem. Is the IP defensible? Is it compliant in regulated spaces like healthcare or finance? These are the things that really matters. Be smart and not just follow the herd. And don't forget, AI is now geopolitical. Startups relying on US chips could be blocked from international markets, and Chinese AI firms have state support but face export bans. And smart investors are spreading bets across friendly regions to stay ahead of the game. Another important thing is to play the long game. AI isn't a sprint, it's a marathon. The real winners always start small, something like a pilot project, a paying customer, a better model. They won't explode overnight, but they'll scale quietly, just like AWS or Salesforce once did. This is your chance to stay ahead. Grab the ebook, join the list, and be first in line when new tools drop. And if this video made you think, share it. Want to separate hype from value in AI? Comment below with your thoughts. We're just getting started with this conversation. Subscribe and hit that bell for more deep dives on tech, ethics, and the future of AI.